Hi, Mark Oswald, and welcome back to a segment of Londonderry Heart, Home, and Soul. Spring buying season is fast upon us as soon as the snow melts. And with me this evening is Justin McCaba, who is with Regency Mortgage. Welcome.
Thank you.
Thought we might walk our viewing audience through the home buying process as it applies to a pre-approval and a pre-qualification for mortgage.
Well, just as long as this path that we're walking is perfectly snowblowed.
Yes. Good.
The difference between the two, a pre-qualification is where you've met with a loan originator to provide them with the necessary documentation that you need and have provided them with a high-level overview of what it is that you bring to the table as far as your income, what you currently hold for assets. They may do a credit check to see what you have for outstanding debt and your timeliness to pay on time, and you're paying on time on that debt. Mm-hmm. A pre-approval takes all of that information and now it goes through the underwriting process. Right. So now that underwriter is taking a look and scrubbing that paperwork to make sure that the information that you've provided to me is accurate and that it meets the guidelines that we need for that particular loan program.
Okay, so let me back up. Pre-qualification, they're going to need what type of documents in order to sit down with you or with a loan officer to generate that process?
Well, as far as loan documentation is concerned, again, we're looking at income, assets, and so if you're not self-employed, we're looking for 1 month's worth of pay stubs, 2 years worth of tax returns, 2 years worth of W-2s. If you are self-employed, then we would absolutely need to see your tax returns, all pages, all schedules. And if you file your business, if your business is a separate tax return, we'll need to see 2 years worth of that as well. Assets, we'll need to see bank statements. And when we talk about bank statements, we're talking about as if you were to receive them in the mail. I don't know about you, but I get everything electronically via email. Mm-hmm. Typically, those email attachments have a PDF attachment that has something that looks similar to what you would have received in the mail. That's exactly what we need. Right. If it says pages 1 through 4, we need all pages, even if there's nothing on page 2.
Right. This page is blank intentionally.
Intentionally left blank, exactly. We need to know that it's intentionally left blank.
Right.
But essentially, we're looking for all of that asset documentation as well.
Okay. All right. And so then, as you described, the pre-approval process then is a little more detailed, some due diligence certainly when it goes to underwriting.
Absolutely.
And that's dependent on the form of mortgage. In other words, FHA, VA, conventional.
Right, absolutely. So, each one is good, whereas the pre-approval has been through the underwriting process already. That process is going to limit the amount of hurdles and hiccups that you could potentially have when you are looking to purchase your next home.
So somebody's watching this right now and they're thinking, gee, I'll call Justin or someone in the business. What should I expect in terms of the length of time required to get the pre-qualification?
Pre-qualification will be determined based on how quickly you get that information back to that loan officer. So if you have it back within a day or 2 days, you can expect a letter within 3 to 4 days. As far as a pre-approval process is concerned, now we're dealing with a pipeline of other loans that are looking to close. So that process, as far as the pre-approval process is concerned, can take up to a week to 10 days, depending on how quickly you're able to get that documentation to that loan officer.
And you and I both have the answer to this question, but I'll let you address it. What's the significance for a potential or prospective home buyer in having this done before they begin their search?
It allows for you to know exactly what it is that you can afford. It is far too often, unfortunately, I have that conversation with a borrower after they found the home of their dreams to find out that based on the student loan debt or the outstanding debt that they may have versus how much income they're bringing in, they are falling just short of being able to afford that property on paper. Had you had that conversation prior to starting your home search, you would know the parameters of which you were, where you were looking and being comfortable in being able to make that offer, as opposed to now having emotionally invested into that property
Right.
and having that fall short. You could have prevented that by having the conversation first.
And I would dare say you and I have both been the messenger to explain to someone that not only are you not getting the white picket fence, the 2-car garage is not going to happen either.
Right. Maybe it's a 1-car garage underneath and no fence.
Okay. What are some common misperceptions, perhaps, that you run into with clients about the financing of a home purchase?
I would say, the big thing I've been explaining to people now is, you may have good credit, and good credit is important in the home buying process. But it's not everything. There are so many other things that go into a mortgage, and just when you've thought you've provided us with, the amount of information that you think you needed, we're asking you for more. Maybe
Right.
it's clarification on a large deposit. Maybe it's clarification on the varying hours that you work. So it's not just credit. Credit's important, but it's not just credit. We need to know the entire situation.
Bonuses?
Bonuses, absolutely. There are guidelines around that. So again, once you've had the conversation with the loan officer, they're able to guide you appropriately on what it is that's needed so you can be prepared.
Good. Other thoughts about the process?
It's important, on the loan officer that you work with, and I can only speak from my experience. I understand the emotional investment that home buyers have in purchasing their next home. But if you go into it prepared, have that conversation first, then go out and find that home, that process is going to be so much easier and less stressful if you just take a little bit of time to have that conversation with someone like myself or a loan officer to be able to get you into your home.
So I'm not going to discuss specifics around interest rates because we're taping this on Tuesday, February 17th.
Right.
And today's rate won't be tomorrow's rate.
That's
or
correct.
next week or next month. So let me ask it this way. A quarter of a point increase would translate to about what amount purchasing power?
It's going to depend on the loan amount and the program. With the 0.25% increase, there could very well the principal and interest is going to change. With that change, to be able to answer that question, I would need three
You
or
need
four
the
other
specifics,
questions.
right.
Absolutely.
And is it
Absolutely.
FHA with PMI? Is it conventional?
Right, that's
A
exactly
lot
it.
of
Varying
variables.
loan amounts.
Yeah.
It's going to, you have the PMI on conventional as well as monthly mortgage insurance with FHA. That's going to vary depending on those changes.
Fair to say still very competitive and relatively low interest rates right now.
Right now, I'll tell you what I tell my customers when they ask me about interest rates. There's one thing for certain. Interest rates are going to come on a daily basis, and your payment is going to be based off of that calculation. A bit is going to be based off of that interest rate. Where they go or where they've been it's a mystery. It's like trying to read a crystal ball.
Final question that I have is talk a little bit about good faith estimates.
Mm-hmm. Good faith estimates are actually going to be around for a short period of time. Come August of this year, the good faith estimate is going to go away, as well as the truth in lending disclosure. After multiple studies that the government has performed, they found that those two forms are actually very confusing to the consumer. So now they're coming out with new disclosures where the good faith estimate and the truth in lending disclosure are being consolidated into one document, and then that document is going to be the same document you sign at closing, as to limit the amount of confusion. So it's an exciting time in our industry. It's always changing.
Daily.
Daily. Probably part of the reason why I'm going gray at such a young age. But as a result, there are some good things coming down the road. So the good faith estimate, it outlines your closing costs. It outlines the establishing of an escrow account. But again, that document is going to be short-lived come August.
Thanks. Thanks for your time.
Not a problem. Thank you for having me. I appreciate it.
We'll have you back.
Sounds like a plan.
Okay. And thank you folks for watching. Remember, as always, be of good heart.